I think bonds are going to fall because inflation is going to erode away their value, and a reduction of demand due to a weak dollar is going to lead to lower bond prices. And of course, as the U.S. economy goes deeper into recession and we get larger budget deficits, that increases the supply of bonds to sell, and we have fewer demand for those bonds.
I'm really keen to talk about gold with you, Peter, because we need to talk about the function of gold and just the trading behavior in the last 24 hours. We've ran from all-time high, crashed 130 points. We made up 70 points roughly. Is gold fulfilling its job? Is it doing its duty?
Yeah, I mean, gold is above 3,100. We're right near record highs. We set that record high last night, but gold's going up. It's going to keep going up. This is de-dollarization. It's just the central banks that have been driving it up. We haven't even gotten the real investor demand yet. That's coming. Retail investors in the U.S. are going to be buying gold, but they're going to be buying it at much higher prices. They're going to be buying silver too at much higher prices. This is a de-dollarization. The dollar is going to go down. I mean, today the dollar is down by over 2% against other fiat currencies. It's one of the biggest moves down in one day in the dollar that I can remember. One of the biggest ever. And this is just the beginning. So many people were predicting that the tariffs would cause the dollar to go up. And they thought that would take the sting out of the tariffs because, yes, we'd have to pay the tariffs, but we'd get to buy the foreign goods cheaper with our higher dollar. Well, instead, the dollar is falling, and that's going to augment the damage done by the tariffs. So not only are Americans going to have to pay tariffs on what they import, but what we import is going to cost us more because of the weak dollar. So, it's a double whammy.
Absolutely. I drafted some questions about two and a half hours ago, Peter, and I had to completely rewrite them. But one of the questions I was going to ask you is why are bond yields dropping and gold dropping at the same time? Should gold be going up and bond yields going down at the same time? But that's changed, of course, within the last 2 hours.
Well, gold is just noise. It's just a bunch of trading going on today, the shakeout. Bonds are rising today, but I think that's temporary. I think bonds are going to fall because inflation is going to erode away their value, and a reduction of demand due to a weak dollar is going to lead to lower bond prices. And of course, as the U.S. economy goes deeper into recession and we get larger budget deficits, that increases the supply of bonds to sell, and we have fewer demand for those bonds. Meanwhile, what no one's talking about is over the next 4 years, about 26 trillion of the 36 trillion national debt matures. So all that debt has to be rolled over. Who's going to buy that? So bonds are going down. The only thing that's going to stop that is the Fed going back to QE. But even that'll be temporary because that will create even more inflation, which is the worst thing for bonds.
You mentioned we need higher interest rates, but what you said, QE, the Fed coming in and the bonds going down, doesn't that mean the Fed will have to cut?
They don't have to cut, but they will cut. And that's why it's counterproductive. Look, we need more factories. We need to build the infrastructure, the supply chains. Where does the resources come from to make those capital investments? It has to come from savings. Well, what's going to encourage more savings? Higher interest rates. So unless we get the higher interest rates, we're not going to get the savings. And without the savings, we're not going to make the capital investments to reindustrialize. So anything that they do to keep rates down, which discourages the very savings that we need to do what Trump claims he wants us to do, is all counterproductive. And it just makes the problem worse.
And we can agree, Americans never been big savers anyway. But, having this discussion
we were until the Fed destroyed that with its cheap money policies.
Yeah, I think the U.S. savings rate is 3% or so. What
the consumer saves.
Yeah. No, what is interesting, I keep coming back to Japan in all our conversations here, and it seems like we're at this Japan moment where we're headed that direction with cheap debt. We have to buy our own bonds and finance the own economy. Is that the way we're headed now? The U.S. dollar is leading the charge here?
Well, I think the dollar has been the source of our artificial economy. We've been able to live beyond our means because we can export dollars to pay for goods. I think that's the process that's going to be reversed. And Trump accelerated it with the tariffs.
No, absolutely. The question is now, are we going to go to 250% debt? And it seems like you used the word de-dollarization earlier. Is the US dollar on its way to lose world reserve currency status? I think that's where this
I think it is. I mean, I think there's no question about it. That's what gold's telling you. I mean, what are central banks doing when they're buying gold at $3,000 and not buying treasuries? They're saying that we'd rather own this metal than get 4.5% yield on US Treasury. So they don't trust the treasuries because they don't trust the dollars. So they want to own gold. And this is a process that is still early and has a long way to go to play out.